forward with Abneesh Roy, who is the Executive Director at Nuvama Institutional Equities, who is joining in on the show now. Abneesh, good afternoon. Thank you so much for joining in. Would you call this a sudden, unexpected announcement on the leadership change for DMart? And what would you, or how do you classify the numbers as well? Because margins saw a contraction, although the top line growth was fairly robust.
Yeah, thanks. Yes, it was a slight surprise. But when you see 22 years and 2% kind of a stake, obviously DMart is quite well run. So big shoes to fill. But I don't think in such large companies, one person exiting will make a big difference because there is a very good template. I think challenges for the new MD will, of course, be in terms of e-commerce and how to ramp up the margins in terms of the competition. And of course, in terms of the discretionary part of the portfolio, I think still a lot of steps are needed. Of course, what is going right in terms of expansion, compounding machine, and in terms of sales also, if you see this time, the delivery was quite good. So I would say that slightly unexpected, but I don't think this is a big concern from a medium long term because clearly the pedigree of the new person is very similar to what Neville had. And Neville will be having a lot of time to really groom him. Of course, promoter and the rest of the team is also quite well placed. So from a margins perspective, this quarter, I think the negative surprise was largely expected given very high competition from Swiggy, Zomato, Zepto, etc. So DMart has done well in terms of sales, but in terms of margins, clearly the industry is seeing very high promotional intensity. And that, I think, as a concern will continue to remain. And that's why we have also cut our numbers. We have a neutral rating. A good compounding machine, but near-term margin, I think compression will remain in terms of risk.
All right, good compounding machine. Near-term margins will be under pressure. Abneesh, thank you for joining in. Now let's talk about the 1 year from here on. You've released your report of 2025, where you see key demand drivers as rural, and in the second half of the calendar year, you will see some recovery in urban demand as well. Diversification, AI, and quality of rural distribution, all of them are key themes. What interests me now is that among your top buys for 2025, we have United Spirits, Marico, Pidilite, and United Breweries. No problems with United Spirits, Marico, or Pidilite, but your outlook on UBL in the very near term, given the Andhra issue, could there be some more disruption or price disruption before we see some improvement? Because no problems on the long-term potential of this industry and the turnaround under the new CEO, but the very near term seems a little uncertain, right?
No, in fact, this is a question on Telangana. So yes, this is a very bold but positive move because if you see both in terms of collection in Telangana and price hike, last 4 years, there is no hike. So from here on, I think it will be improvement. Yes, near term, some numbers will be impacted, but in this kind of a liquor business, investors are looking at profitability also. And with a 70-75% market share in Telangana, I clearly see that the pricing growth should come back once government realizes that customer is not getting the brand, because in this kind of a business, to create capacity takes a lot of time, and rest of the players also make losses in Telangana. So it is not that they will start making profit. Second is leakage from other states will happen. So Kingfisher will be available from other states. So I would say that with 4,000 crore kind of tax being given to the government by United Breweries, I think this is a good step. This is a bold move, but this will lead to definitely positive outcome. Of course, timeline is difficult to predict, but my sense is state government is losing tax from day one. And clearly, as I said, leakage will happen from other states. So it's a loss-making state for United Breweries. It contributes 15 to 17% of volumes. But from a negative EBITDA, eventually it will turn positive EBITDA. And this quarter also, if you see Q3, we expect 8% plus volume growth for UBBL. Of course, Q4, there will be some impact of Telangana. But eventually, EBITDA-wise, it will not be much of an impact.
Abneesh, you're mentioning there is some recovery that you're expecting on a gradual basis, at least in 2025. But what are some of the key risks to this theory of you seeing some gradual recovery? Are there any on the anvil?
So firstly, on the stocks, if you see CY24, it was a challenging year for consumer sector. It was generally the staples were out of the theme and out of flavor. We see that improving because growth in India is challenging for most sectors. But in FMCG, if you see, pricing growth is coming back. Rural is doing well. From a risk perspective, there are two risks. So if you see in urban India, currently growth is challenging. You will see in Q3, Godrej Consumer, Tata Consumer, Nestle posting fairly disappointing numbers. I think Street is aware of that. But that is the risk that with inflation again coming back, for example, if crude is at $81, rupee is also depreciating, that again will lead to more inflation. And how does that impact the lower end of urban consumer? That is, I think, one risk. The other could be, again, raw material risk also, because again, this is also linked. So in terms of margins, how do we see? My sense is in the December quarter and Jan quarter, there should be some margin pressure for most of the staples companies. But I would say that pricing growth will come back and local and D2C players will lose out. So that's where I think the market share gains will happen. And the pricing growth will lead to operating leverage. So more of a gradual recovery. But I think in the current weakness in staples, I think Colgate, Britannia, Lever are looking good. But once the Q4 results are done, I think Godrej Consumer, Tata Consumer will also see interest coming back, and even Nestle. But in those three stocks, in the near term, there is going to be a lack of triggers.
All right, just a final question before we let you go. Typically, we ask you about the entire year, etc. But the next 13-14 day period is the Kumbh Mela. Typically, a boost for consumption in that period. Have you heard from consumer companies on the plans that they have for the Kumbh and any sort of demand generators out there?
Yeah, very good question. I think this will lead to a lot of 40 crore kind of footfalls and clearly a lot of revenue opportunities, a lot of marketing opportunities. I think Dabur, Britannia, Varun Beverages, Pepsi, etc., and of course Unilever, all the FMCG companies are tapping that, and this should give a slight fillip. I don't think it moves the needle too much because it's a 45-day period, and there will be a lot of marketing opportunity rather than revenue opportunity in my view. But of course, this helps further rural consumption because this is a tier 3 kind of a consumption. So we are positive on it, and we do see the large companies really invest in that and get some revenue opportunity also.
All right, Abneesh, thank you so much for joining in and sparing time and sharing with us your views on DMart and on the entire consumption space as well. By the way, still 23,200. The bulls fighting to defend that level tooth and nail for the Nifty. Be interesting to see if the second half manages to bring about any form of respite for the index. Where there is no respite though are the broader markets still continuing to remain at the lowest point of the day. Time for a short break, then more on the markets and specific stocks on the other side. Stay tuned.
Hey, thank you for watching this on CNBC-TV18. Hope you liked it. For more such interesting news and updates, follow CNBC-TV18 on all the social media platforms.